Last week I took a total number of 5 trades, 1 on Tuesday, Thursday, and then 3 on Friday. I'm not really happy with my performance during the week because majority of these trades were FOMO trades, except for one, which was something I was expecting price to come into. And even though it wasn't, I got out at break even, it was the only good trade that I took without FOMO. The only other good trade I would say is the Euro-Dollar on Friday after I saw price came into a higher time from POI, and then we got market structure shift and fair value gap, and that was a good entry. But because it was after NFP, I kind of rushed into the trade, and I would say it was a FOMO entry. Going into this week, I had it in my mind that I wanted to eliminate bad trades. I wanted to keep my fear of missing out as low as possible because August, going into last week of August, as you can see, I significantly improved my performance, cut down the number of trades I was taking every week. Percentage of good trades was going up. I wanted to keep my good trades that I exited early and not exit them early, which I did on the last week, and that proved to be, profitable. This week I was just too early with a lot of my entries. And I also missed a couple of trades this week, which would have been profitable. Of course, it always is in hindsight. So I'm gonna look at those trades as well. In fact, I've already reviewed those trades and uploaded a video as part of my own journaling, which I will add to a link to on this video. It was mainly because I didn't have a clear direction this week of what price wanted to do. So, and I was being way too aggressive, way too early. So let's just dive into those trades. I got into a long trade on pound dollar after the release of PMI news. Bit of a FOMO trade because I got in as the news came out, mainly because I saw price had dropped into a high time frame POI and I anticipated price to reach a certain drawn liquidity. High time frame wise, we're on the daily time frame we're on the daily time frame chart, and I expected price to come into either this breaker block or this inverse fair value gaps 50% level, which it did yesterday, and price has been bearish, and I wanted to enter at this low as price came into this daily time frame fair value gap. I wanted to take a short-term long. However, as price action played out during the day, it came into this 240 order block. I've only just started to learn about order blocks properly, so honestly, this is just a FOMO trade based on an order block that I don't really know whether it's in the right location or whether it's even a correct order block. Mainly because I saw the way price approached this order block this morning and in the New York session. So it came down, it took out liquidity of that low. So essentially a double bottom that with the liquidity grab, and before the second test we came up, held these highs, held this fair value gap as well, and then displaced lower. And my prediction this morning was I was looking for a trade at these levels. So this 240 fair value gap was here that got rejected, price displaced down here, and I wanted to take an entry on this pullback. However, I didn't get an entry because price reached this low before I could get an entry, and then price has been ranging since then. Then we pulled up, held this bearish fair value gap, then took liquidity off this high, right? And I still expected price to at least come down to these lows, at least a 50% off the 240 order block, or what high time frame I want to come to that daily time frame fair value gap. But as I saw this price action play out, I changed my direction. I wanted price to come up to this high first, and then maybe pull back down. So on the 15-minute, right, we pushed up after the London session, pushed up, pulled down, pushed up during New York session, rejected these fair value gaps, and then pushed down, and we are at that 60-minute order block. So yep, I took an entry as I saw price just before the news displace down like this, which is exactly what I normally look for. When I look for an entry into a high time frame POI, came into that 60%, 50% off that order block, and I entered as the news came out, literally at these highs with my stops here. So because of that, I didn't like the entry that I took. It wasn't in a good location, and I got out around here, which was at 0.5% loss. Also, my prediction, is still that price will come down to these levels. It's just I thought maybe we would go up first before coming down. So that was one of the main reasons I exited the trade early. And also adding order blocks is just throwing me off. So I don't want to be adding them until I'm fully confident in them. If I was to look for an entry, then it would be at these lows, or this 50% off this fair value gap is good, which also aligns with the daily 240 order block. Ideally, I want to see this level tapped into, the start of this fair value gap tapped into, which would be a better location for me to go long. And that's that. Let's see how this trade played out. It looks like I would have been stopped out, or eventually. After that entry, that fear of missing out, FOMO entry, price tanked, as I was predicting. Price to come down to these equal lows. However, it comes into the 50% off this 240 order block that I was watching, and also holds this fair value gap and starts to displace with some bullish order flow on the 60-minute, which is one of the reasons that I was quite hesitant on going down to these equal lows, which is also just above the daily time fair value gap at 1.3075 level. Yet price, after holding this 240 fair order block and also these fair value gaps, we see this displacement on 60, price holding bullish fair value gaps along the way, and price continues to push up. This is during London session. We see price continue to push up. We tap into that 240 order blocks 50% one more time. Look at the amount of time we tapped into that level 3 times, almost 4 times, and found more support and then continued higher. So yeah, honestly, the trade was such a FOMO trade. I was predicting price to come down to this 1.3075 level. However, because I saw price come into that 240 order block, the start of that 240 order block right here, and then we took out the liquidity here at these highs, right at 1.311 level, and I saw this close above this London high, which should have been evident when I went on to higher time frame that it was in fact just a liquidity grab, as price has been displacing lower after making this swing high and displacing with this bearish fair value gaps and holding that. So yeah, just a FOMO trade. I'm not even sure why I took this trade, so there's no justification for it. I should have, instead of going long, I should have gone short, which is what I was anticipating the whole fucking day. The whole day I wanted to go short, and then because we took out this London high and came down with this strong bearish momentum before the news on Tuesday, fuck knows, man. I have no idea. So I'm a bit frustrated with this, but it's what it is. I need to stick to the higher time frame bias that I have a lot of the times, because my biases are correct, and I just stop shifting them based on a 5-minute swing close and a 15-minute swing close, which is literally a liquidity grab before going into my drawn liquidity. Yeah, we didn't reach that 240 equal lows, but given that we held this 240 order blocks 50%, which is clearer on the 4-hour time frame, at 1.31 level, good psychological level for price to find support, and displaced with bullish fair value gaps on the 60-minute, which is also a high time frame. Something I'll watch on these pairs is 60-minute 240 fair value gaps after rejecting certain PDRAs, and the way it rejected this level was quite evident that price was finding some strong support at that level. And then we saw how price played out. It just continued up until we reached that monthly time frame fair value gaps, consequent encroachment again for the 3rd time on the weekly time frame, was clearer, and then we dropped. Now I expect price to, this is the weekly time frame, rejecting that monthly time frame fair value gaps, consequent encroachment 3 times in a row, and now I actually do expect to tap into that equal lows next week. Such a strong bearish momentum coming in. We took out liquidity of these highs, and then another liquidity grab on Friday afternoon, and then we started to displace again. So yeah, I do believe we can get down to that level. Maybe we'll tap into this bearish fair value gap Monday and take a short. So I've taken a short-term trade on euro dollar at 9:25 candle. It's almost 9:30 a.m. in the UK, so just before the pound construction PMI news. But this is on euro dollar. Price came into this 50% off this daily time frame fair value gap, which is something I was expecting price to come into yesterday, and look for a shorting opportunity, but we came into that today, and this is just a short-term trade. I'm not going to aim for these lows. Yeah, so this 50% lines up with this swing high on the 1 hour time frame as well. We take out yesterday's high, and we come into this point of interest, right, which is quite significant for me. However, the order flow is quite bullish. Maybe we will come into this fair value gap eventually later on today, which also lines up with the 60-minute fair value gap, and find more resistance there. However, because this is a London session right now, and we have just took out these highs, tapped into a key POI on the 5-minute time frame is clearer. We paused just before making this swing high, and I did expect I took a trade around this high. I've got my stops right up there. Just a 1-to-1, I'll be happy with this trade, taking targets off at these lows. And I do believe price can come into somewhere in this discount and find support to push itself up to that 60-minute fair value gap later on today. As you see, after rejecting this daily time fair value gap, price has been displacing up. We got a fair value gap here on the 240 time frame. We had a fair value gap here. We held this 50%, pushed up, fair value gap, and also again, came up, took out these lows, and put in another fair value gap, closed above this low order block, and is now pushing up. So honestly, this is a short-term counter trend trade, and I wouldn't expect price to come deep into discount. So yeah, that's the trade. Let's see how it plays out. Immediately after the trade that I took, price dropped. This is where it dropped down to these lows at 1.109. However, because I saw this swing, this candle just before, and I wanted to take my target at 1.1090 level rather than 1.1091, which is where price came down to. If you look at the 50-minute time frame, this is the start of that bullish fair value gap, which is something that if I had seen that, I would have taken my targets at that level. But because I had just focused on the 5-minute, I wanted to take targets at 1.109. Then price pushed down, then pushed up, started to reject these highs, and then I got out at break even because the 50-minute fair value gap is already cleared out. I would have, my goal would have been to take target ones at that level and then move my stop to break even. However, that's fine. One thing that I noted was that the fact that, yeah, it's a fair value gap on the daily time frame, which is above, a swing high and at that 50% level. However, yeah, it is also the first fair value gap in this range, which is in discount or premium. This in discount, and I want price to come into premium if I'm going to short. So yeah, I mean, if I was going to be aggressively trading at that level, at least I should be waiting for that 60-minute fair value gap to be tested before I look for any kind of a short on that daily time for fair value gap. Essentially I'm not sure if it's a turtle soup or just manipulation of that daily time for fair value gap, because taking a short at this 50% when price has not, it has cleared the 60-minute swing high, which is, grab liquidity, which is good. However, because this daily time fair value gap is the first one out of the two in the range, which is also not in the discount, so when going short, not in premium, I shouldn't really be looking to go aggressive at that level. And lo and behold, price finds support at the level and then pushes up to that 60-minute fair value gaps right there, or the 240 fair value gaps 50%, or you can even say they cleared out 60-minute fair value gap. And ideally, I should be looking for a short at those highs. This pin bar would have been a great entry, and then taking lows at these equal lows. Because I took a subpar trade here, honestly, this week, mentally, I was just, I don't know, I was not ready for the next step. So every time I took a trade that was subpar, I kind of just shut off instead of jumping back in and looking for another entry. I'm not sure what was going on. I had other things in my mind. I was busy doing other things, and that kind of threw me off. Because last week I was taking these trades. If I was taking it here and I was wrong, I was re-entering at the next, very interesting POIs. So for me, this is a very, very good POI, which is daily time for fair value gap, title swoop, which is clears the fair value gap on 60, which is the perfect entry. And it also comes during a session, so London or New York session, and then creates a high. I wouldn't have gone for, I wouldn't have aimed for London lows or New York open. I would just aim for these lows right here. But that's what it is. I took a short on pound dollar on Friday in the morning before NFP news. So on the 6th of September. On Thursday, we held this, bearish inverse fair value gap. We've tapped into this. We're tapping into that bearish breaker block. And on the lower time frames, price came into this order block. Again, it's not something order blocks is not something I trade. However, on the lower time frame on 1 hour, I like the way price approached this structure zone, this point of interest. We failed to close above each highs coming into this order block. Even in the morning, we've failed to close above. It looks like we could potentially get a bearish engulfing pattern on the 240 because of the way these candlesticks are being printed. On the 1 hour time frame, we have price has been forming this channel. We have, as you can see, failed to close above each high every single session. And then I took an entry right as before this candle was printed. So we took out yesterday's highs. So this is what I was watching. So like I said, I like the way price approached this point of interest on the 1 hour and the 240 time frame. We accumulated during the Asian session, or just accumulation in the last Asian session and yesterday's close, and we started to push up. We took out liquidity here, trapping the sellers, then pushing up, trapping buyers now above this high, and I took an entry somewhere around here with my stops somewhere there, and I didn't want to take a long position. However, honestly, I again FOMO'd, and as I saw price push up more and more, I ended up getting out of the trade. Although I did have my stops way up at 97, I believe. Yeah, I did have my stops around 97, which because I wanted to give myself plenty of room to breathe, and I wanted to target these lows. So as this candle was printing, I decided to exit the trade at break even because I honestly, again, subpar entry, and because of that, it led me to exit that trade early. I did not want to hold on to that trade, and then after that, my mind just completely switched off because I saw this entry afterwards where price, starts to displace this displacement with fair value gap right there, which I even looked at and thought, oh, that would be a good entry, but did not enter because of the fact that I had already taken a subpar trade, and it's just my mind switched off, which is what happens when you take subpar trades and try to get back in. And that's one of the biggest psychological friction when you're trading, is how can you get back into a trade after expending so much energy, on just one subpar trade. It can be difficult, and that's something that I need to keep reminding myself, that if I do enter a subpar trade and exit, doesn't mean that the play is still not, my trade is still not in play, because I could get another entry which would be a plus setup, and I should not hesitate and should not be scared to take that next one, like this one. Another reason why that was a subpar trade to me, entering at this candle at 245 or 250, was because of the fact that normally when I look for a aggressive entries, and especially when the point of interest is below a high and price has displaced, leaving fair value gaps right here, and then creates an equal high, which on the 5 minute is clearer. You can see price created equal highs above with fair value gaps above, and then the high swing above. Ideally, I want to see at least these fair value gaps tapped into, and then put stops above these swings. And this is exactly what I don't wait for, is I don't wait for price to tap into that swing high, that fair value gap right there. And I waited for that. I would have entered at this high with stops above those highs and then targets here. But coulda, woulda, shoulda is one thing, and doing it when it's live is another. So there's another thing that I need to be continuously aware, if I'm taking aggressive trades is what's the next level that price could potentially tap into and then find some resistance or support. Then of course price drops right after I exit the trade early before NFP, because obviously I don't want to be in that trade for too long due to NFP anyway. And then we push up, take out that monthly fair value gap, conjugate encouragement one more time, and then we drop down. And this is where I was looking for another entry, was at this 5 minute where price dropped. This is a draw on liquidity at 1.3147 level, clear draw on liquidity for me, and price has been displacing since NFP. We came and created a swing high, and I entered, or I thought I entered, at these highs right there. Had my stops above those highs and targets down to that level. However, as I entered the trade, I accidentally entered on euro-dollar instead of pound-dollar, and euro-dollar had already reached its draw on liquidity. So yeah, there was some kind of a divergence between pound-dollar and euro-dollar, and after seeing that I had taken it on the wrong pair, I exited the trade, and yeah, this trade didn't count. I think I took some 0.2% loss. It would have taken me out, stopped me out anyway, but let's face it, with FOMO going on, I would probably take on target ones at these lows and then let the rest play out. I took a long on euro-dollar on Friday after NFP. So NFP price comes in, rejects this bearish fair value gap at 1.115 and then starts dropping down to 1.1075 level, which is also another daily time for fair value gap in a bullish order flow. So let's just see what NFP does, right? So this is NFP. On 1 hour, you will see it clearer. We've got a lot of liquidity here as well with this swings below 60-minute time frame. So I was just watching this on the 5 minute at that fair value gap after price took out all of these lows. It starts to displace. We get displacement and we get a market structure shift as well. Price closes above this high too, and I took a long position at this pull, but as price was pulling back on this candle right there, and I got out at the first level of danger at this order block. However, I could have waited for price, or I could have re-entered after exiting that trade, because price closes above this bearish fair value gap. Then we get a pullback, after which price starts to displace up into the discount of this range, of this NFP range, post NFP range, and then finds resistance at this, the daily time for fair value gap. So another entry could have been, right here with at least 1-to-1, but I got out at around, I believe, 0.821, and that's my trades for the week. This was also kind of a FOMO trade because I only noticed the daily time for fair value gap after price started to displace up. I should be aware. I should have been aware the fact that there was a daily time for fair value gap, and the fact that it's below a lot of swings on 60 minutes, so a lot of liquidity rest in there, and the fact that we start to displace on the 5 minute time frame with this pattern. Fair value gaps holding, market structure shift, closing above bearish fair value gaps to form a inverse fair value gap. It is a good sign to look for a long. Although I wasn't ready for the higher time from POI, as markets start to play out, I noticed, and jumped on it straight away. However, I should still be able to, I should be predicting those before the market shows its hand. You know what I mean? Like, I can't, because NFP came, I was looking to go short at this highs, 1.115 highs. I missed it, and then price dropped. I saw this fair value gap and below these lows, and then price starts to displace. I should have known, or I should have, in my head, been ready and make the predictions before it started to play out. So in my head, or in my plan, it should be that if this fair value gap is respected on the daily time frame with market structure shift and fair value gaps on the 5 minute, then I'll look to go long. It's that famous quote, fail to plan, plan to fail. Or to quote Benjamin Franklin, if you fail to plan, you are planning to fail. And this should be planned well ahead.